Hello, good morning, traders. It's Monday, beginning of a new week. We can say even it's the beginning of a new month because we had only few hours of December last week. And I would like to present you a strategy which I call the first threat strategy. It's a strategy for scalpers. Uh, Especially, we know that there are days when market is less volatile, is let's say more even boring. And for such days, I think scalping is the best technique to we can use. I prefer scalping on Mondays. That's why maybe I have the session on Monday about scalping, and I like to scalp also on Fridays. But of course, any day is good for scalping if you want, you can do it. Generally, scalping means taking not a big amount of pips in a short time. So let's maybe I'll explain in few words what means smaller amounts and short time. You know, it depends, of course, on the time frame you scalp. If you scalp on a 5 minute chart, you must be really quick. And you must remember that scalping might be very profitable, but from the other point of view, scalping can be very tiring, can be exhausting. So I don't try to scalp, the whole day around. Maybe 2, 3 hours per day is okay. And the strategy I have is very simple, and the assumptions are such that it's not a big problem to find a setup. The only problem is to be enough patient to see, to wait for that setup to occur. Because many times we want to trade too much, we want to trade too fast. Even there's no clear setup, we try to trade emotionally. No, in case of this strategy, the emotions, you must put them aside. Just focus on the charts to see if uh, the assumptions were met. This is what we need for the scalping. We need first that we need a chart. As you see, you can scalp on 5 minute charts. You can even scalp on 1 hour chart. But the truth is that I prefer a lower time frame for scalping. I prefer scalping on 5 minute charts, sometimes 15-minute charts. Uh, I see Andy is here. Hello, Andy. Can you show? Uh, and this writing, maybe you can show how you scan the markets for the first red strategy you showed at Friday. Yeah, okay, of course we'll do it. We spend a few minutes on theory, and then we will go to practical, let's say, exercises, because this is the best way to learn to use the strategy. Well, I'm using in the strategy chart and a double column ACD. Of course, you can use also the indicator which is showing supply and demand zones, but as you know, this indicator is available only for MetaTrader platform number 4, number 5. I don't have this indicator for other platforms. So uh, this is it's good if you can use it, but if not, you can omit it. Then you should plan your targets and your stop losses, let's say, individually. Because I'm using those zones, especially when I search for a target or for a stop loss. Well, Bollinger Bands. Bollinger Bands is a very popular indicator. For those who are not enough experienced, the Bollinger Bands can be used as a indicator showing if the setup is high enough or low enough. What means high enough, low enough? Is it a top of an upswing or is it the bottom of a downswing? Bollinger Bands could be helpful. Maybe there will be a few minutes time. I will show you also how to use the Bollinger Bands. But generally, the main part of the strategy, the main indicator I am using is this double color MACD. Well, I must say it's a fundamental element of the strategy. So, what is MACD? Many times I showed it, but today we are streaming also on YouTube, so probably there are viewers who maybe didn't see my former presentation, so I have to say a few words also about MACD for them. MACD is an indicator. Examines the convergence and divergence of two moving averages. The moving averages which are used in the MACD indicator, those are exponential moving averages, and there are 12 and 26 periods. What means 12 and 26 periods? I'll explain in a moment, just to show you how a indicator looks like. The indicator looks like this. This is the value. Uh, it's very simple because it's just showing the distance between two moving averages. So it's nothing sophisticated. I think the most sophisticated thing in this indicator is its name. It's not so popular to see an indicator called this way. But generally, this what you see here is distance between two moving averages. So the MACD is created from two moving averages, distance between the 26 period and 12 period exponential moving average. This is the value here at the bottom. So it's all what you need to know about the MACD. The only thing is that when you install the original MACD, which you have on your platforms, you will have one column chart. I'm using the version which is changing the colors. It means that when it's reaching a maximum and starts to fall, uh, I see the first red bar here. That's the moment when um, I'm interested in the I'm interested in this instrument because I can say, okay, if the MACD is turning around, maybe it could be a sign that also the price will be changing. Why? Because this it means that the moving averages reach the biggest distance between them, and then they are coming closer to each other. Moving averages, they are very strong indicators. They are showing us what's happening on the market. 12 period in moving average shows us what happened, what is the average of the last 12 candles. 26 will show us what happens, the average from 26 candles. It means that this one is, we call it a faster moving average, and the faster moving average is probably giving some signs that the market's at the moment changing the bias, um, the sentiment, on that instrument. Uh, this double color MACD, if you need it, you can download it from this channel. It's absolutely free. But you can also search the internet and just write double color MACD. Probably you will also find this indicator. But what is important are the settings. The settings must be like this. Those numbers here. Remember those numbers. It's 26 for the slow moving average, 12 for the fast one, and the signal is 1. If you will use my indicator, then you need to remember to change those values because originally they are a bit different. They are 5, 35, and 5. And regarding the alerts, I would advise you to disable those alerts because those alerts are really annoying. If you have 20 charts with 20 MACDs, you'll have so many uh, you'll have so many alerts that you will get absolutely lost on those. You will forget about where is the which chart gave you the signal. No, the alerts are useless here. Okay, but why I'm using MACD? MACD is helping me to identify a moment where I can enter a sell or a buy order. In case of sell, this is the picture showing the assumptions of the strategy. I see also Yanis here. Hello. I see also Miriam. Nice to see you. Well, We'll go in a moment to live markets, and I'll show you how I am searching for setups. But of course, you should understand that I'm searching for setups which are based on the strategy. So the strategy says that if a candle is creating a maximum, but after it's closed, it changed the MACD, it's a big chance that the market will start falling. MACD is a kind of a filter. MACD helps me to avoid entering false signals. For an example, if you see a maximum like this candle is creating a maximum, okay? It is a maximum, no doubt. But is it a signal for me to sell? No, because MACD didn't change at all. So then I'm waiting for another maximum. Here we have another maximum. And again, nothing changed on the MACD, so I cannot short it. Even I had a bearish candle here. It also didn't change anything. So I'm waiting for the moment when we have a maximum, but MACD after the candle closed changed to bearish. This is for me a signal that it's time for selling. The moment here when it's turning. So as you see, this double call MACD is very helpful because you just need to react to colors, green or red, green or red. So, um, but of course, it's not all. It's not so simple that only a change of MACD will give you a chance to open a order, because you must also remember that it's very important to identify the trend, because if you scalp with the trend, you can have really good results. If you scalp against the trend, you must be very concentrate. You must be very focused on this what you are doing, because if you are trading against the trend, any moment the market can return to the trend. So I always say trading with the trend uh, is really easier. It's easier because even if things go wrong for a moment, sooner or later they come back to the trend and you will get your profits. So very important to if because not always it's possible to identify the trend, but if you are able to identify the trend, then uh, already you are 50% winner. If you scalp with the trend, you are 75% winner. This is my feeling. Okay, why I said that not always will this work? Because market is generally wild. The market is doing all the best just to spoil our humor. Market is doing all the best to take our money. And here's an example where we have two setups, and one is okay, one is not okay. First setup, very interesting, because we have candle number one is created. I call it, let's say this is the candle number one, which is the top of the swing. After it closed, it changed to bearish. So it is a very good setup, because first candle from the top is let's call it a game changer. Here also we have a divergence. Divergence is always when the indicator is showing opposite direction than the price. Price is creating new maximums and MACD is creating lower maximums. So we can say this is a high, lower high, and this is a high and higher high. This is called divergence. Divergence is always, oh, I'll show an example of divergences here. You see, price is creating new maximums, and MACD is creating new maximums, but lower maximums. And the moment when it's changing to bearish, it means that the MACD is getting red, is a sign that a divergence just began. So this candle closed, it's changed the MACD to bearish. This is our maximum, so we put our stop loss over the maximum, and you have a big chance to get some profits. Divergence is a very strong signal. Sometimes it happens that the first candle from the bottom is already a game changer, like here. So look how early we are already in a trade. So divergences are very strong signals. Remember, divergence is when you see that